Hello. So we're going to look at the question, assess the likely impact on the textile manufacturers if they decide to raise the wages of its employees to a living wage. And this question is specifically related to the fast fashion case study. The key thing here is we're looking at the impact on the manufacturers here. So this is obviously in the fashion industry. We're thinking about a manufacturer obviously gets the cotton, for example, and then obviously turns that cotton into a t-shirt, for example, and then sells the t-shirt to the retailer, such as Marks and Spencer's, and then Marks and Spencer's, as the retailer, sells it to you as a customer. Obviously, as I reiterated, the manufacturer is the one making the t-shirt, and Marks and Spencer is the retailer. So first of all, start off with a definition. So obviously, when we think about employing a living wage, we're obviously thinking about businesses being ethical and obviously showing some element of corporate social responsibility. So obviously we can define ethics at the start of our response. So let's have a look at the likely impacts on the textile manufacturers now. So let's consider first of all a positive impact with regards to employing the living wage. So we can relate this to one of the theorists that we've studied over the course. So we may see that the living wage may increase motivation, and I know you're all itching to tell me that it is therefore Taylor which would agree with this, because Taylor obviously argues that money is the main motivator. Obviously had his theory with regards to piece rates. So let's have a look at what this increased motivation will therefore mean for the manufacturer. Well, what that would mean is that they would see increased productivity, and in particular it would be labour productivity, because obviously it's the workers who are receiving this living wage, and they would be the ones who would become more productive because they are now motivated by that money. And as a result, what the business could achieve from this is that they could achieve economies of scale. And what we mean by that is obviously with the workers more motivated, they're going to hopefully produce a greater output. So I'd see output rising, and we would expect that as output rises, the average costs would fall. So the business would be able to obviously benefit massively from the economies of scale due to the living wages. Average cost. Okay, so that's a positive impact of the living wage covered there. Now let's have a look at a negative impact of this living wage. So if we have a look in the case study, we see that some particular businesses are more interested in keeping their costs low. So the retailers are particularly interested in keeping their costs low in order to sell the products at a low price, but by hopefully selling it at that low price, they can attract all the customers. So for example, if we look in the case study, Top Mark is the name of the business that says that they focus on cost as being the most important factor. So they're obviously looking to minimize their costs. And if they're looking to minimise their costs, they're looking to buy from the manufacturers, therefore at the lowest possible price. But obviously the manufacturers in this case, they're going to see an increase in their costs due to the living wage. And as a result, they're probably going to have to increase their prices to reflect that. And what that means, therefore, that would mean an increased cost for retailers such as Top Mark. And therefore, those retailers with their increased costs, that's going to lead to a decreased demand. And we'd expect, therefore, total revenue to also fall for the manufacturers. So we've clearly covered now a positive and a negative with regards to the impact on the textile manufacturers of employing a living wage. We've looked at the motivation of the workforce increasing, and that being a positive impact because it could allow the manufacturers to benefit from economies of scale. However, we have argued that the manufacturers may see reduced total revenue because obviously certain retailers are looking to minimise their costs, and obviously employing a living wage is going to raise the costs for those retailers if they're buying from these manufacturers who are now employing the living wage. So let's have a look at some other positives to develop our answer further. So another positive impact we may wish to have considered is obviously the reputation of the manufacturer has now improved. So the reputation of the manufacturer has improved, and therefore that's particularly important for businesses who are very much focused on corporate social responsibility. So as seen in the case study, it mentions that Marks and Spencer's with its Plan A is very focused upon corporate social responsibility. Social responsibility. So Marks and Spencer's Plan A, focus on corporate social responsibility. So what that may mean is that may lead for an increase in demand from M&S for manufacturers' products. And as a result, that may lead to an increase in total revenue for that manufacturer, because obviously businesses such as M&S are now wanting to buy from them because obviously they are more ethical and seen as more ethical. Now we must consider another issue that we may face with regards to a negative impact on the textile manufacturers. So we've got a negative impact. And what we see obviously that wages have risen. We must consider what type of cost a wage is. Well, a wage would be classified as a variable cost. So increased wages would increase variable costs for the business. And we can link this now to break even. So increased variable costs would lead to a reduction in the contribution per unit. And as a result, that would lead to an increase in the break-even point. And what that means is that the business would have to produce a greater output and sell all that output. It will have to produce a greater amount of output and sell that output in order to start making a profit. So increased wages, obviously wages being a variable cost, is therefore going to lead to a reduction in contribution per unit, remembering obviously that contribution per unit is calculated by your selling price minus your variable cost per unit. And obviously as a result, the contribution per unit falling, the break-even point is now going to be higher. So we've clearly covered two negatives and two positives with regards to the impacts on textile manufacturers if they decide to raise the wages of its employees to a living wage. Obviously, we should therefore finally conclude with a judgment. And our judgment should consider, is the living wage going to have a positive or a negative impact. And we should just explain why with a simple sentence that would probably just repeat something that we've mentioned in our answer already. So living wage, positive or negative, explain why, and ultimately we need to look to include a depends on factor. And our depends on factor, obviously we could consider the importance of ethics to consumers. And obviously, if we're looking for a better answer, we need to make sure we explain what we mean by that. Obviously, consumers who see a living wage as important will more likely purchase the products. So retailers will stock more. So just to reiterate that that judgment, we say, is a living wage going to have a positive or negative impact? We explain why, linking back to what we've already discussed in the case study, linking back to what we've discussed in our answer. And then we just need to explain, well, whether it's good or bad depends on the importance of ethics to the consumers. If consumers see living wage as important and ethical practice of a business being important, they'll more likely purchase the products. So retailers will stock more, and obviously that's going to increase. Obviously, the demand and total revenue would therefore be greater for the manufacturers. And that's the key thing within this answer. We need to make sure we're looking at the impact on the manufacturers here. So maybe we can just add in that little bit at the end. We'll stock more, increasing demand and total revenue for the manufacturer. I know that's very squished on at the end there, but that's the impact on the manufacturer. So thank you very much.